All right. Hello, everybody. Welcome back into the NASDAQ Options Superstars program. I did want to get a video out here today highlighting our brand new trade from this afternoon on Intel. I'll walk you through the chart pattern that led to that trade decision this afternoon. Also, I'll walk you through how to structure the trade inside of the broker platforms that we use here at NetPicks. I'll show you the Thinkorswim platform as well as the Tastyworks platform. But I want to start out by walking you through some general thoughts on the overall market and as well as our existing positions that we have on. We know that the market has been explosive here the last few weeks in both directions. Ultimately, the move has been to the downside, but you can see along the way some of these rallies have been vicious. They just haven't had any follow through. Because the volatility has exploded like it has, we've been taking some steps on our side to help navigate through these markets. First of all, we haven't been taking near the number of trades that we're used to. And that really has been lately due to the lack of liquidity. It's been more difficult to get fills on options at good prices. Some of you have noticed that on your side. I certainly have noticed it on my side. It's more of a challenge to get fills at good prices. We've also seen a lot of head fakes. There's been a lot of false moves in both directions where, you get the market, looks like it's going to fall out of bed. Then it rallies up 1,000 points. Fast forward another 24 hours and you're down another 1,000 points. And it's really easy to get caught up in some of those head fakes. Something else that we've been doing is focusing strictly on the vertical spreads and specifically the credit spreads right now. The volatility is so high. The option prices are expensive. It's in our best interest to use more credit spreads right now. That's what's going to give us the best odds of success and take what the market's giving us. If we start to see things settle down a bit here over the next week or so, we can shift our focus back on over to the long calls, long puts. Now, from this daily chart on SPY, you can see that we did hit a new low on the move to the downside here today. 218.26 is our new reference point on the downside. We did bounce off of that level today by about $4, almost $5. So good to see. Definitely want to see a continuation move to the upside, but clearly the weakness is in control at this point. The bears are in control. If we get a bounce to the upside, I would love to see us test the 8-period EMA. We have not tested that level now in a number of weeks, right? You have to go back to all the way back to March 4th, the last time we tested that level. So we're due, definitely due for a bounce. Whether it's sustainable or not, we'll just have to wait and see. I'm not saying the bottom is in long term, but in the near term, we are certainly due for an attempt at a bounce. The volume continues to be explosive here on SPY. 319 million shares traded today, which is a great number. We just have not seen a ton of liquidity in the options. It's been more difficult because the bid-ask spreads have been so wide. They've been widening out these markets as volatility stays extreme. Want to see that tighten up a bit here over the next few weeks. As far as our open positions go, before we get to a chart of Intel, I've had a lot of questions from people asking, what are we doing with our open positions? Why are we still holding many of them? The key to remember is we're in a lot of vertical spreads, specifically a lot of credit spreads. And those are always going to be risk-defined trades. I know what my maximum loss is right up front. And in this type of a market, we have certainly seen it the last few weeks. What seemed impossible just a month ago has now been very possible, right? We've seen it. It's been doable. And in this market, even though it seems like this bearish market's taken over and there's no shot at a bounce, if they release a huge stimulus package over the next few days, and if we start to see some of these virus numbers improve, the market's going to rally up. Whether it rallies all the way back, no one knows. Is it a long shot for some of that to play out? Is it a long shot for this virus just to disappear immediately? It may be a long shot, but at this point, on some of these spreads, with many of these still having some time left, it does not do us any good here to close out of the positions. There's no additional risk to hold. So if we know that we're in a risk-defined trade, we know what our maximum loss is up front, we might as well hold longer just in case we get that huge relief rally. Again, it's not probable, but if we get it, we might as well try to take advantage of it, even if it only means that we can, battle back and take partial losses on some of those spreads. it's in our best interest to hold as long as we can. So that's why I continue to hold. It doesn't make any sense to close these positions out here when we still have time left. There's no additional risk on some of these trades to continue to hold. When we take action on our side, we will certainly let you guys know right away. All right. Now on the Intel trade, we have a lot of similar chart patterns to what we're seeing on Intel. Some of the financials, the energy stocks, a lot of these have been absolutely beat up. A lot of them are at very strong chart extremes on the downside. Here on Intel, look at the pulse indicator. We have a whole slew of green bars, and I've been saying this lately. It is very unusual to get more than 2 or 3 green bars in a row. And look at this. I mean, we're working on what, 4, 5, 6, 7, 8. We're working on what, 8 or 9 green bars in a row. Very unusual to see the market stay this extended. When you see a green bar on the pulse indicator, it means that we're between a 2 and a 3 standard deviation channel move on the downside. We're very, very oversold in the near term. It does not mean price action can't continue to head lower. It just means it's not statistical. It's not statistically probable. Odds favor in this type of a pattern, odds favor either a period of consolidation or a bounce higher. And lo and behold, what has happened here over the past week and a half? We have started to consolidate down here. Just over the past 24 hours, we have started to bounce to the upside. It hasn't been anything significant yet, but this is a very typical pattern that we have seen historically. And this is a pattern that typically plays out with a continuation move, in this case to the upside. Now, I don't want to just come in and buy a long call yet. The reason for it, on my sentiment indicator down at the bottom, has not flipped from bearish to bullish mode. I have to wait for that timing to be close to perfect. If I want to buy a long call, the moment I put that position on, it's like holding a ticking time bomb. That move has to happen in my favor, and it has to do so in a pretty big way in order for me to offset the time decay and offset any type of contraction and volatility. So I'm not interested in a long call here. Absolutely interested in selling a put spread like we did today, because now it gives us 5 ways of making money on the position, and it allows us to better react to current conditions. So what we did before I go over to the trade page, we did get confirmation with price action closing above our 8-period exponential moving average. That is that red and blue moving average there. So we did get some confirmation that, hey, maybe a near-term bottom is in place. Definitely liked what I saw here on Intel. Even though the market was down, Intel, had a pretty strong day, and we'll see if that continues, especially if the market as a whole begins to bounce over the next few days. Going over to the trade page on Intel, we decided to use the April 17 monthly options. Those are the ones with 25 days left to expiration. I like to be in those cycles that have between 20 and 40 days left to expiration. That's typically the cycle that gives us the best liquidity, so the biggest volume, biggest open interest, and in many cases, the biggest range of strike prices available to us. So we went out to the April monthly options, and from our alert that we sent out, we mentioned that we wanted to sell to open the Intel 17 April 20, so that's the monthly options right here. And we wanted to sell the 47.45 put spread for 50 cents or higher. So I came up to the 47 puts on the right-hand side. I right-clicked on the ask price, went to sell, and went to vertical. It pops up an order down at the bottom where I am selling the 47 put. And then from the alert, it mentioned that we wanted to buy the 45 put at the same time. So I switched the long option to 45. And from our trade page here, you can see that it's trading for 52 cents mid-price. In our alert, we mentioned that we wanted to get filled at 50 cents or higher. So this one did meet our criteria. Okay, we were able to get filled. I saw fill prices here today anywhere between 56 and 60 cents. So anywhere inside of that range was doable this afternoon. So if let's just call it 50, let's go 57 cents for example here. Let me click on confirm and send. So in our order confirmation box, you can see that the $57 per spread is the most I can make on the position. I am risking $143 per spread. So I'm risking between 2 and 3 to make 1. The reason I'm okay with that is this trade does give us 5 ways of making money. I make money if the stock moves up, down, or sideways, as long as it stays above 46.63. I'm okay. So obviously, with the market oversold, I mentioned I'm looking for a move to the upside. That would be ideal. That's going to allow us to make money the fastest. But if we are dead wrong, and the price of the stock is just below $50, I have got about a $4 cushion that this thing can move to the downside and I can still make money. The only move that hurts me is a big move below that level, which I'm not expecting because the market's already oversold. So up, down, or sideways, I'm okay. I make money from time decay adding up, which it will. Every day that passes, that would help my position. And I make money from volatility decreasing. We know volatility market-wide is sky high, and it's been high for the last 3 weeks. Chances are over the next, I would say 2 to 3 weeks, that volatility is going to continue to contract and move back down to a more historical range. So we've got 5 ways of making money on this position. My target zone is when I can buy the spread back and keep between 50 and 75% of whatever I collected. So collecting 57 cents here, if I can buy this thing back between 14 and 28 cents, that would give me 50 to 75% of my max profit. My initial target, I'm always going to create my closing order at that 75% number. So I'm going to create my closing order at 14 cents. Have that order working over the next few weeks. So at any point in time, over the next few weeks, if we get this spread trading for 14 cents, we'll look to book the profit. That order's already working and I don't have to sit there and watch it all day, every day. Okay, so that is the position on Intel. Over in Tastyworks, let me load up the Tastyworks platform. We are going to click on the trade tab here in the vertical toolbar on the left-hand side of the platform. Click on the trade tab and then change the symbol from GLD over to INTC, over to Intel. We're going to open up the April 17 options here, the ones with 25 days left. We're going to go over to the 47 put. I am going to left click on the bid price of the 47 put. And then I'm going to left click on the ask price of the 45 put. As I click on those, as I click on the bid price of the 47 put, it boxes it in red, indicating a sell order. As I click on the ask price of the 45 put, it's going to box it in green, indicating that's a buy order. I'm doing both at the same time, and it's going to be summarized down at the bottom. All right, so I'm selling one 47 put, STO stands for sell to open, and then I am buying one 45 put, BTO stands for buy to open. I can always change the quantity here. I can click on the left and right arrows to change how many spreads I want to trade. So you can just change that there. As I change it, you'll see the quantity number down at the bottom will also change. So I can change it to 3, 4, 5, whatever number fits your account size. We can go ahead and adjust the quantity. The price here, the mid price, 53 cents mid price. We can always arrow up and down to make sure that we have the price that we're looking for. Like I've mentioned in previous videos, we ideally would like to get filled as close to the mid price as possible, the midpoint between the bid and ask prices. So that's what we've done here. The order type needs to be set to a net credit. Anytime that I say sell to open in the alert, like I did this afternoon, that means we want to collect a credit to put the position on. Time in force, we want to set this to a day order. Anytime that we're placing an entry order, it does need to be set to a day order. If you click on the drop-down menu and switch that to a GTC or a good till cancel, that's fine, and I will do that on a closing order. I just don't like to do it on entry orders. So we'll keep this as a day order. Then all you have to do is click on review and send and get that order in place. So very, very simple process there. If you have any questions on how to place the trade in Intel, certainly let me know. More than willing to help out there. So the plan of attack for this week, would love to see this stimulus bill get approved finally, and finally get a bounce here in this market in the near term. So we'll see if that happens over the next few days. Again, if you have any questions, either post a comment inside of Slack or in the NetPicks app, or email me directly, mike@netpicks.com. So I'm going to wrap this video up here. Enjoy your evening, everybody, and I'll be back with you on Tuesday for our next round of alerts.